This is Catherine Swanepoel, your director at Southvias. Thank you for accepting this interview. Do you have a few success stories you would like to share in a nutshell? Is it something you're allowed to do, or
what do you mean?
I mean, like looking at the way you've adjusted your investment approach. Mm-hmm. Can you provide specifics on a significant move you made, including this currency depreciation or the commodity crisis?
Sure. So I think, it's always, as I mentioned, it's dynamic. So we certainly don't make huge shifts in our strategy or allocation, but we do shift a little bit. So, North Africa and East Africa, I think geographically are at the moment so-called sexy, kind of geographies. So we still allocate across the board, and we still allocate to Nigeria, we still allocate to South Africa, but we have started to look for additional opportunities, particularly on the co-investment side in North Africa and East Africa, where, the markets are slightly less reliant on commodity prices. I think across the board, including ourselves and other fund managers, currency depreciation is a big issue and a big question mark. I think it's always been something that, has been top of mind for many fund managers and ourselves. But given what's happened in certain markets, particularly, Nigeria, Egypt are examples where you've had significant shifts in currency depreciation. I think all managers have become more attentive to how they account for currency depreciation, including ourselves. And so I think whilst you have to factor that into your base case on any investment that you look at, there's also other ways to consider currency depreciation. So, you can get, through geographical diversification, you can make sure that you're not overexposed to any one currency. If you invest in on a portfolio basis, you try to allocate some of that capital to businesses that tend to be perhaps have more of a natural hedge. So either earn their current, their revenues in dollars or in euros or other hard currency. And then also more defensive sectors generally will stand up to currency depreciation better as well. And revenues will also incrementally increase with depreciation over time. So those are some strategies. And then, managers have also started to think about creative ways of structuring deals as well, using either local debt to help fund part of their deals instead of putting all, hard currency into the country in any one specific year. So those are all, examples, some of which I've stolen from our underlying managers, but I'm sure they won't mind.
We don't mind, at least. How best should funds stratify their asset allocation?
I think one has to take diversification into account, but one also needs to be careful not to over-diversify. So, that is always a fine balance. I think vintage is very important. So, how you spread your investment over a number of years and in which years you invest. Again, that's also difficult. Sometimes deals come, they don't always spread themselves as, naturally as you would like, perhaps. And so that you do kind of see some lumpiness in certain years. And one would expect that as one sees opportunity, coming to the fore in particular years as well. But we take vintage diversification quite seriously. I mentioned also geographical, sector. It's all something that needs to kind of play into your strategy. But it has to remain dynamic because it also depends on the opportunity set at any one point in time as well.
You're looking at the continent from Southern Africa. How do you look at the opportunities, looking at other regions and having this perspective that is very original, at least for us in Western Africa?
Well, look, I think we see Africa is very much our investment strategy, outside of South Africa. So we do allocate into South Africa as well, but really the bulk of our investment goes outside of South Africa. We have a mix of investors. We have local South African investors. We also have international investors. So they really want to get access to that Africa growth story, and they're not only looking at South Africa as that aspect. So we know Africa well. We have team members who come from all over Africa as well as South Africa. We think we spend a lot of time in Africa. A lot of us have worked and been doing this for a long time, and so we feel we do understand the continent very well. But I think there is an advantage to having come from an African country. For us, we understand the dynamics of an emerging market or a frontier market, I think potentially better than, international investors. that may disagree with us, but I think, you know, as you said, it is a unique perspective. And so I think the important thing is to maintain an outlook of a long-term investor. You know, we are long-term investors in Africa. You know, the last 18 months have been particularly challenging with commodity price squeeze, some lower growth in certain countries that are more exposed to commodity prices, and then the currency depreciation, which has been a particularly, you know, acute experience in the last 18 months. But the important thing is to remember we are long-term investors. We're here for a reason, and a lot of the companies that we invest in, their underlying growth stories continue. So their growth trajectories are still there, despite the challenges that they're facing.
Thank you very much for this long-term perspective. Key trends that you expect or that we should watch for the next decade, if possible?
Oh, tough one. In terms of sectors or investors or...
In terms of the concrete added value of private equity for increased prosperity throughout the continent. Because I guess that in the end, this is what we benefit all from.
That's absolutely true. Look, private equity, in my mind, is certainly a force for good in Africa. You know, it has tended to accompany economic growth, growth in underlying companies, growth in employment, and that's something we continue to see, especially because private equity in Africa is really a growth story. It's not a buyout story. It's not about, you know, it doesn't have the same kind of leverage components as you would see in some of the more developed markets. So it really is a growth story. We expect that to continue. We do think the countries that are experiencing, you know, economic hardship at the moment will rebound in the next 2 to 3 years. That, you know, we do expect to see that. And there are certain secular trends which have been experienced across other emerging markets, including in Asia and Latin America, which very much revolve around, you know, the demographic shifts, urbanization, a young growing population. You know, while that middle class growth may have to a certain extent be overestimated in Africa to date, it is still a long-term trend which we expect to come to fruition.
Mrs. Swanepoel, thank you very much.
Thank you.